So as many folks just want to close the book on this chapter of 2022 and look forward to a fresh new year, I think it's important to look at a couple of charts to determine kind of what we've experienced and look at a few charts that might be indicators as to what we might expect for 2023. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. So over time, the economy tends to flow in a cycle, and it goes from kind of an optimistic view, to excitement, thrill, euphoria, FOMO kicks in, fear of missing out, and that generally marks the peak of a cycle. And then when the market starts to drop, there's a little bit of anxiety. Some denial. No, this isn't a big drop, and then it keeps going, and then there's fear, depression, anxiety, and then just, pure shell shock at the bottom. I would say that there's no denying that we're in a major pull down at this point. So I would say on the spectrum, we're probably somewhere between the fear and depression, stage of things. To me, that says we've got potentially some more downside risk before we can kind of shake this thing off and move forward. All right, you've seen this chart a number of times if you've watched Markets in 5, but essentially the way we see it now is there's just been a major resistance line that's formed over time this year, and the market's had a very, very difficult time getting through it. It hasn't been able to pop through it, so it's tried multiple times. So again, the more times a resistance level gets touched, the more importance that resistance level has for traders. And so this most recent kind of test was a double test and couldn't get through it and dropped way down. So we played this wave, if you will, and when it couldn't get through it and drop down and drop below the 200, we went ahead and raised a bunch of cash. It came down, looked like it was going to kind of settle into a shorter term trend and possibly break it. Came up, tested it again, couldn't, and the bottom fell out. So now the market's trading below all of its moving averages. RSI is definitely broken down, and MACD's confirming this move down. So if we look at the S&P over a 5-year period, I think it starts to put it in perspective a little bit. So we've had certainly a very volatile, very wild, year this year for sure. But we have not even come down to touch the pre-pandemic peak yet. And so when you look at this downtrend that we're in, to me, that looks like a very natural place for the market to find some support for the next wave up. I mean, certainly could it turn and go up, next year and just everything feels better? Maybe, consumer sentiment can change, but at the same time, I feel like that that we've got some more issues to kind of work out, and this pull down may not be over yet. So, if we're looking for our next entry point, it would be somewhere down here near the pre-pandemic peak, and potentially look to ride the next wave up. But certainly if it goes up with meaning and is able to break through that resistance, we would certainly put a lot of that cash we've got on the sidelines back to work. All right, so the last chart I'm going to show you is the Treasury yield curve. And I've addressed this one in the past. It's been a little while. I think it's important for us to really pay a little bit of attention to this chart. Right now the Treasury yield is dramatically inverted, right? So that means that, short-term yields are paying higher than longer-term yields. So, and again, the last several major recessions were preceded by a yield curve inversion. So that's kind of a warning sign. That's a clue. So, but what's interesting is during the yield curve inversion of 2000, as well as the yield curve inversion of 2006, the market here in the pink, the S&P 500, rose as the Treasury yield dropped in both situations, and then both were followed up with a nasty little recession. So, this time is a little different. As the Treasury yield has dropped, the S&P 500 has also dropped. So I don't know what that means yet. I mean, time will tell, but all I know is that we've got a nasty yield curve, inversion, and generally speaking, you should expect a recession to follow. And so I think 2023 is going to be a very difficult year. I think there'll be a lot of swings that we'll be able to play, and I think there will be a lot of drops that we're going to need to work hard to avoid. So I'm not one for predicting where things are going to go necessarily, rather just taking a look at where we are and in the short term what we might expect. But there's so many variables, so many factors out there that can change the picture for 23. So the way we see it is we just play the cards that are dealt to us and not worry about what cards might come. So if you have any questions, give us a shout. We wish you all a very blessed and happy end of 2022, and look forward to a very fresh 2023. And make sure to hit the subscribe button, and I'll see you next year on Markets in 5.